All right, guys, welcome back to the channel. Let's talk about the pros and cons of stock investing and then the riskiness of stocks. So quickly, let's go over the pros. One of the pros is that it's cheap. So it's very cheap to start investing. In our example, in the last video, we had shared that one share of Coca-Cola cost about $60. Well, I mean, compare that to, buying a house to rent, which you'll have to put a down payment, factor in interest rates, find good renters, etc. So, you can see why stock investing is very easy to get in. Along those lines, investing in stocks is not labor intensive. So you just open an account, put money in the account, and then you can just start buying stocks at any time. There is potential for price appreciation. You get dividends, so that's free cash. And stocks can potentially grow much faster than other types of investments, such as real estate, bonds, gold. So for example, some years the stock market has gone up by 20% or more. I know in 2023, the S&P 500 went up around 23% for the whole year. Cons of stocks are that market crashes can send the price of your stock down very quickly. So I've seen the market lose 30% in a month during the coronavirus pandemic in 2020. That was in March of 2020. So the market went down 30%. You can lose all your money. So for example, if you put all your money in the wrong companies and they go bankrupt, well, that's it. You can lose all your money. Another con of stocks is the constant negativity in the news and the internet about the economy and the stock market. It's all this news about whether we're going to have a soft landing or a hard landing. It's going to cause you to doubt, whether you should be in stocks or whether you should sell out and stay on the sidelines for a little bit while the situation, quote unquote, improves. I speak to a lot of investors in my line of work, and some of these people spend years waiting for the right opportunity to get in. Some of these people that I've spoken to sit on the sidelines for like 10 years while the market has tripled since. So it's pretty incredible. So the point there is that too much information will cause you to start doubting your investments. When you're invested in something like real estate, for example, you're not able to just log in every day and see what the exact value of your house is and what kind of demand there is for your house and whether it's the right time to buy or sell or anything like that. You just live in your house and you don't think about it. You're comfortable in the fact knowing that your house is going to appreciate in value if you just hang on to it. So, but people don't think that way about stocks. You don't tell yourself, well, if I just hang on to these companies and stop looking at them every day and stop watching CNBC all the time, they're just going to go up in price. We just don't think to ourselves that way. It's just our mind plays tricks on us when it comes to stocks. So how risky are stocks? Let's talk about how risky stocks are. So stocks can be very risky if you pick for example, if you pick a company that you know nothing about, you put as much money as you can into that company, and then you cross your fingers and hope for the best. So that's what we call gambling, not investing. Okay? So there's a better way to invest your money in which, you do a little bit of research, you pick some large companies that produce essential products or services. Think of companies that provide essentials like electricity, food, medicine that people need, things like that. So an even better way is to pick a few great companies that you can hold for many years. And in future videos, I'm going to show you, how to pick great companies. All right, so let's rank the riskiest types of stocks to the safest. And like we said earlier, as you can see on the slide, technology is going to be your riskiest, but it's going to have the most potential for big gains. And utilities is going to be, your slow and steady earner, but it's going to be the least volatile of the different stock sectors. So that was it for this video, guys. Next, we're going to get into bonds. So if you're finding value in these videos, please hit that like and subscribe button, and we'll see you in the next video. Take care.